Okay, so normally the questions are given this way, right? It's either they give you the financial statement, i.e. the trading account, profit and loss account, the balance sheet, and you'll be asked to compute the ratios. Okay. So what is expected at that point is for you to quote the formula, pick the figures, insert the figures, calculate and get the ratio on a silver platter. Okay. Sometimes too, the examiner will give you the items in a trial balance and expect that you would use it to find your gross profit, net profit, whatsoever, to be able to calculate the ratios. Okay, so whichever way, I'm sure my professors are on point. So let's take this first question. It says the following was extracted from the books of Omega Company Limited. So we have been given the trading profit and loss account for 31st December 2022. So you have your sales. Your cost of sales was determined using the opening stock, add purchases, less closing stock, and you have it there. So this is our cost of sales, 380,000, deducted from the sales to get a gross profit of 120,000 with less expenses, and this is our net profit. We're also given the balance sheet as follows. We have fixed asset 101,000. We have current assets, which includes stock, debtors, cash. Okay, and we're given some liabilities, that's creditors, and our capital was given as 143. We added the net profit with less drawings, and we arrive at the capital employed. There was no long-term liability. Now the requirement says you are required to calculate stock turnover, gross profit margin, current ratio, asset test ratio, and return on capital employed. And this, I think there's a past question, right? So each of the ratios would attract 3 marks. Altogether, you have your 15 marks, right? So my dear professor, frankly speaking, I don't think I want to solve the question together with you because I feel like it's very easy. No problem. Let's go through this one. Then maybe the next one you would have to do it, okay, as assignment or exercise. So that's how you go about it. So solution, you put the name of the business, which is very, very important. Like I tell you always, the first ratio is the stock turnover. So you quote the formula. So stock turnover is equal to cost of sales divided by average stock, right? So you go to the financial information given and you pick your cost of sales. And we saw that in the trading account, right? This is your cost of sales. How do you know it is your cost of sales? Because when you less the cost of sales from your sales, you get the gross profit. So this 380,000 is the cost of sales. So we pick that figure, put it there, and then divided by average stock, where we saw the average stock is your opening stock plus your closing stock divided by 2. So opening stock is 30, closing is 50. Added together, we get 80. You divide by 2, you get 40,000, right? So there you have it there. Your cost of sales 380 divided by 40,000. You arrive at 9.5. And when you get that figure, you add time. So it means that the business is able to sell and replace stock 9.5 times in a year. Remember, these metrics measure the financial year. So in a year, they're able to sell stock 9.5 times. It's not bad, but until you compare with another, you can't really make any meaningful comparison point, right? So let's say there are some questions that they will ask you to prepare for a particular year and another year. I think this year's WASSCE was like that. They prepared for 2 years. Okay, so at that point, when they ask you to compare, then you can do the comparison. So 9.5 is good for the business, but if it was compared to say 12 times, then we say that 12 times is better. Any question so far? Prof. Senam, you wanted to say something? Are you good, Prof. Senam?
Okay.
Okay, great. The second ratio is the gross
Yes,
profit
please.
margin. Okay. So we quote the formula gross profit divided by net sales times 100. So we go on to the trading account to find the gross profit, which was given as 120,000. So this is your gross profit, right? You divide by net sales. Now you know net sales is your sales less returning was. But in this question, there was no returning was. So this is our net sales, 500,000. All right, so we push it in there. We push it in there and we have 120,000 divided by 500,000. We multiply by 100 and we get 24%, right? So again, until you are comparing with another, you can't really make a. So if you are comparing to say 30%, then the 30% is better than the 24 because we said the higher the better, right? Okay. The next ratio was the current ratio, which is your current asset divided by your current liabilities. So you will find these items on the face of the balance sheet. So you come to the balance sheet and you pick all your current assets. Fortunately, this examiner is very benevolent. So we have it here. Stock debtors cash total 75,000. Then the liabilities, we only have creditors, which is 20,000. Right. So you go in there, put in the figures, 75,000 divided by 20,000, and you get 3.75 compared to 1. Now, I told you if it is greater than or equal to 1, it is better. Okay, but if it is lesser than 1, then it means the business is having liquidity issues. Okay. I think the next ratio is the asset test ratio. So we just have to deduct the stock from the current asset, right? And divide by the current liability. So the stock was 50,000, the closing stock. We less it, and the computation will get us to 1.25:1. Again, it's greater than 1, so it's better, right? Okay, the last one was capital return on capital employed, where we quoted the formula to be net profit divided by capital employed times 100%. So the net profit, as we saw on the face of the profit and loss account, is 70,000. This is your net profit. You divide it by the capital employed. And dear ladies, I told you the capital employed is your total asset minus current liability. So actually, if your balance sheet is presented in this form, that is the balancing figure, right? Okay, because here you have your total asset plus your working capital, or your total fixed asset plus your working capital, which is the same as total asset minus current liabilities. So 156,000. You put in the figures and you are going to get a return on capital employed ratio as 44.9%. Okay, great. So you see that it's not really difficult, right? You just have to know where to pick the figures. That's where most students find the challenges. So there's another illustration here. This time, you see, they didn't give us, they have not prepared it for us. They have just given us the items: sales, gross profit, net profit, fixed asset, right? And they ask you to calculate for 2 years, 2 separate years. So you just have to indicate the year when you are, calculating the. So you are asked to find working capital. Please, this one, I think you know, what is the formula for working capital on the balance sheet? Your working capital is equal to what? My professors, you know this one now. Eh? What men can do, women can do. Professor.
So I'm trying
Okay.
Current current assets minus current liabilities.
Exactly. And I'm sure Prof. Jacinda was going to say. Thank you. So your working capital is always your current asset minus your current liabilities. That's true. Okay. So you were asked to compute that. So here you just, for 2004, you look for your total current assets and you less the total current liabilities, right? I think the current assets are stock, debtors, and then cash at the bank, right? And the liabilities are creditors and your bank overdraft. These are your two. So that's it. Now the second was gross profit percentage, which is the same as a gross profit margin. So you just put in the formula, gross profit divided by net sales, you multiply by 100. So I think I have the solution down here. So this is how I went about it. So for the working capital, I do for 2004, I do for 2005. Okay. So your working capital is your total current asset minus your total current liabilities. You pick your total current asset from the information given. Do same for the liabilities, less and know your working capital. For the gross profit margin, you go to the formula. So you go to 2004 and pick your gross profit. You divide by the net sales, right? And do same for 2005. So you now get the the realities in this topic, and I want to believe so far, if you are not 100%, at least you should be around 85. Right? So I'll pause for questions and then wrap up with today's class. And definitely expect an exercise or assignment on this topic as soon as possible. Okay, I'm waiting. Question time. Okay, so there are no questions for Mr. Amua. So on the notes that men should also take up okay, Prof. Jacinda has a question. Prof. Jacinda, please go ahead. Your mic is muted, so unmute, Prof. Jacinda.
Oh, sorry. Sorry. So please, have you seen where, like, we're discussing something earlier today before classes started,
Okay.
and then we were saying something about choosing between departmental accounts and suspense accounts.
Yeah.
But like, you see, we did that at school, so I don't know if maybe you can add departmental account too, but at the same time, we not like replace it with that. So can we make like room for two?
Okay, point well noted. I think I'll do that. So we'll fix it in there. But you see, dear professors, I think the timing, well, let's wrap up on this lesson and then we'll discuss those issues so that doesn't, especially for those who would have to watch the video, okay, wouldn't be bothered much. So today, dear professors, we've seen accounting ratios. I believe now you appreciate that these ratios measure the efficiency or performance of the business, right? In terms of profitability, its activities or operations, its investment or capital gearing issues, right? We saw the 5 types of ratios, i.e. the profitability, the activity, liquidity, investment, and then leverage. But for the purposes of our exams and our level, we seek to pay attention to the 3. Profitability included a gross profit margin, net profit margin, return on capital employed. Liquidity bordered on the current ratio and asset test ratio, right? And the activity gave us the rate of stock turnover, debtors collection period, creditors payment period, right? Okay. So I will share with you the notes and I also put an exercise for you to submit before Thursday, God willing. And if you have any questions, please come to me. Let me know so we'll address it. So let me officially end the class. Thank you very much for making the class an interesting one. Okay.